Welcome to Talking Real Estate with Champions Real Estate Team at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark T. Wehner II, Team Leader, Champions Real Estate Team. Joining me today is Russ Williams with Williams Mortgage. So we jump on here every Wednesday and kind of give you a rundown of what's gone on in the real estate market over the last 7 days. And we'll start off with our quick tip. So our quick tip is one thing we preach over and over, I think, on this video, is that get in contact with a real estate agent and a loan officer as soon as you're thinking about buying a house. Even if you're kind of having an inkling of, hey, well, we might want to buy, if this year in the fall, we want to buy a house next spring or even next year, now is a great time to, oh, thank you. Sorry, I got my 2.5-year-old, joys of doing live videos at home. But getting in contact with those professionals will really help you set the stage. Because I know some people, it's springtime right now and like, oh, we want to buy a house. And if you haven't met with an agent, and want to hear the Champions Real Estate Team or met with Russ and get a game plan together, you may need a couple months just to get your ducks in a row before you are able to, know exactly what's going on in the process of it. So, but sorry, I got my 2-year-old here. But that kind of helps going through the process. So we'll jump into our graphics as we go through here. So we had 457 new listings over the last 7 days. So that's up from our 400 that we had, basically 50 more listings, which was, a lot from the previous week. So new contracts written, 413. So we're going in the right direction. We're getting more listings than we are contracts written. So it's obviously getting more houses out there. We had 300 happy homeowners this last wait, did we share it? Here we go. Where am I at?
Yep, you're shared.
Okay. So I'm like, I don't see about the video. So, so we had the 300 happy new homeowners on that side of it. So as we've said, this time of year, we're getting a lot of new listings coming on the market. And obviously we're getting a lot more buyers that come in the market. And we're seeing that, and as rates are being pretty favorable where we're probably going to be for the next little bit. And so, buyers aren't really scared of those interest rates as we're at. But let's take a 30,000 foot view of the market in the Omaha Lincoln. So we have 1,964 homes, and then we have 1,146 in Douglas and Sarpy County. That number actually didn't change from last week. So that was the same numbers we had last week. Existing homes down a little bit from the previous week at 370. And then new construction houses at 776. So we got 1.8 month supply of inventory and 319 average sold price out there. So that number hasn't changed in a week or so. But as we've talked, we've seen the prices across the country are starting to rise again. And I think that's just the time of the year. We're getting more buyers out there, and get more competition, and in turn supply and demand. And I think that's kind of where we're leaning at. So, yeah, we'll jump in with Russ here and see what he's got going on in the mortgage industry side of it. So how we doing, Russ?
Mortgage rates are still holding fairly steady. We have probably a busy next 3 weeks here as we have some big economic news coming out on Friday with the Federal Reserve Bank's favorite measure of inflation called the Consumer Price Index. The Personal Consumption Expenditures Report. There you go. And then 2 weeks later, we have they're both the retail and wholesale inflation numbers, and as well as a new jobs report. And all those are expected to potentially be very friendly to inflation, which might mean improvement in mortgage rates. But to your point, Mark, you've talked many, many, many times about it's important to have a game plan. And it's never more true than it is right now. This is not a market where you can simply show up and win a bid, as as anybody who's looking to buy a home knows. This is a market where you have to have a plan, and it's very important to get ahead of it, to talk about things like appraisal gap. We've talked about that in different sessions, or to talk about different strategies to make sure that you have sufficient funds to close, or how do we plan this out to make sure that we're not putting ourselves in a bad spot financially, and we can improve upon that later. So I'm going to echo what you had to say, have said many, many times, is that you've got to be prepared ahead of time. And so for that reason, I'd really recommend 4 to 6 months out, probably, for people to have a conversation with you, Mark, your team, or with a lender. We'd be happy to help, to just take a look at where you're at and paint a picture of where you need to be. A lot of news we're getting right now, and maybe we can talk about it next week. A lot of negativity about the what we call loan level price adjusters. The way the media is spinning it is that for folks that have high credit, they're having to pay more in fees and interest rate than folks with marginal or low credit are having a reduction in their fees and interest rate. And there is some truth to it. but there's some cloudiness in between. And so folks that aren't familiar with how that works, and if their loan officer is not explaining that to them, they really should find a loan officer who will, because there's a lot of things moving right now.
Yeah, and I think that's like what you said. Is it, my goal is to eliminate that frustration when you're buying a house, because I think when we don't have that much inventory out there from a buyer's perspective, is that like we said, if you just give us a holler today and we'll buy a house tomorrow, that's great, happy to help you. But if you just got making sure you got potentially, if there is an appraisal gap, that's going to be out there, because I think right now I'm seeing that there's houses that are going above listing price, which is very common, that I don't think really need an appraisal gap, because there's other comps out there that justify those prices, because some agents will list it a little bit lower, trying to gain activity and get multiple offers, which is a tactic or strategy that some agents use. And then, so you might not need those appraisal gaps, but the seller will probably accept one that does have an appraisal gap just for that warm and fuzzy feeling of, hey, it's above our list price, and we have that $5,000, $10,000, $20,000 cushion of an appraisal gap. So let's take that offer, and so clients that you're working with that may not have that, cash on hand to do that are kind of missing out when they should be able to buy the house, because they're offering a very competitive price, but they're not giving that little cushion, that warm and fuzzy feeling to that seller. And I think that's where that frustration can come into play, from a buyer's perspective. Hey, we've written, 5 offers, 10 offers, 3 offers, whatever, and it's like, hey, we're not going to get a house, and honestly, it's tough too, because I think if you stop, I don't know if you can save enough fast enough to keep up with potentially what prices are doing a little bit, that appreciation, the competitiveness in the marketplace, and, you want to wait 6 months to save up, but you may only save a couple $1,000s, which is great, but that's really not going to boost much on an appraisal gap when you have, people out there, writing $10,000, $15,000. Like I said, I had my house that just closed a couple weeks ago, which we've talked about before. I had a $15,000 appraisal gap on a $250,000 listing. So that was in my opinion, that was really high. Haven't seen that much, but as I talk to more agents, we're seeing it more. And so maybe that's somebody's helping out one of those first-time home buyers, a family member, things of that sort, that's helping them in that regard. So it's just a matter of, having a conversation with myself or someone on here in Champions Real Estate Team, or Russ, a couple months in advance, to say, hey, where are we at? Where are we going? What do we need to do? What's the market going to be like in 6 months to a year? Ultimately, we don't have a crystal ball, but we want to get enough ahead of the game as we can. I know I had a conversation with one of my past hockey players, was it a month ago, 2 months ago, just this exact same conversation. And he's like, all right, well, let's wait. I don't feel comfortable right now. Awesome. Cause he, just having that honest conversation with him and saying, hey, here's the, difference between FHA conventional loans. Here's, what your down payment's going to be. Here's what your monthly payments, and here's where we're going to have to put offers in to be competitive, cause if you're approved up to 250, you probably shouldn't start looking at houses at 240, thinking you're going to get, I can work with $10,000. Cause, the last couple of houses I've written on that were $220,000 houses were escalating up to 250, so if you're at 240, they're probably escalating to 260 potentially, depending on, area and, condition and things of that sort. So, but I guess that's a long-winded answer to my quick tip, but that's kind of one of those things that we need to do just to keep you educated and coach you through that process and give you the tools that you need to make that decision. Is now a good time? Great, let's rock and roll. If it's good to wait, then let's wait. And we'll keep you educated throughout the process. And maybe we jump back in 4 months, or something changes or, in that regard. So, but that's what we like to do here at Champions, Real Estate Team, is, coach you along the way. But I think that's kind of everything that I had. I don't know if you have anything else, Russ, that you wanted to
talk about this all day, Mark. I think maybe we hit some of those topics next week, and welcome back next week.
Yeah. Awesome. Well, appreciate everybody listening. Take care and see you next week. And we'll talk